Futures are up, but the real test comes later this week. US equity futures climbed in early trading, with technology shares leading the way after Microsoft posted earnings that beat analyst expectations. Nasdaq futures rose about 0.6%. S&P 500 futures gained roughly 0.35%. Dow futures added more than 150 points. Not a dramatic surge, but a meaningful lift in a market that has been watching corporate results closely for any sign that the broader economy is holding up. Microsoft's strong quarter did the heavy lifting here. When a company that size beats expectations, it tends to lift sentiment across the tech sector, and sometimes beyond it. Investors have been hungry for evidence that corporate profits can stay resilient even as borrowing costs remain elevated. For now, Microsoft gave them something to work with. But the mood is not entirely calm. Traders are carrying what the market calls Fed jitters, a low-grade anxiety about what the Federal Reserve does next with interest rates. The Fed has kept rates at elevated levels for an extended stretch, pushing hard to bring inflation back down to its 2% target. And every major data release between now and the Fed's next decision carries real weight. That brings us to the number everyone is watching this week, the Personal Consumption Expenditures Price Index, or PCE. This is the Fed's preferred inflation gauge, the measure policymakers put the most weight on when deciding whether to hold rates steady, raise them further, or eventually cut. It carries more influence over Fed thinking than the better-known Consumer Price Index. The stakes are straightforward. If PCE comes in hotter than expected, meaning inflation is running faster than hoped, bond yields are likely to move higher, and stocks could pull back. If the reading comes in cooler, it strengthens the case for a rate cut later this year, and markets would likely take that as a green light to push higher. Right now, the market is caught between two forces pulling in opposite directions. On one side, corporate earnings that have so far held up better than many feared. On the other, a Federal Reserve that has shown no urgency to ease policy and is watching incoming data carefully before making any move. That tension is not going away soon. Until the inflation picture becomes clearer, sharp moves in response to data surprises remain a real possibility in both directions. The PCE report is the defining data point of the week. Whatever it shows will likely set the near-term direction for both bond yields and equities. Watch that number. And watch how bond markets react to it first. This briefing is brought to you by First Financial News. Clear daily coverage of the economy and markets at firstfinancialnews.com.